Oh, hey there. It's like we never left. Dave Bartosiak here with Zacks.com. We've got another live earnings preview here. This time we're talking about Google. Now that Amazon's in the bag, hopefully you checked that one out and you're rip-roaring and ready to rock to hear about another one. So we've got Google. I keep calling it Google because it's Google. It's still the Sears Tower and it's still Google. I don't care that you're making me call it Alphabet. I guess we'll get used to Alphabet. So we got the Googs here coming up. One thing about Google is they don't issue guidance. So we've basically got estimates that we've gotten from analysts to kind of give us an idea of sort of where we think that Google's going to end up here. Now, last quarter, Google kind of disappointed us, and we're going to go ahead and take a look at that too. But I think right now we're looking at EPS of $8.04 for the current quarter, revenue of $20.77 billion. Now, just like I was talking about with Amazon, tech earnings have been pretty good, and you had some big moves in some big stocks. So Apple went from 97 to 103. Facebook got all the way up to 133, I think, in after hours trading yesterday, and I think we're around 127 now. And again, we're going to have Amazon reporting after the close, as well as Google. So it's an action-packed agenda today. But as always, let's go ahead and dig into the price, earnings, price consensus and EPS chart here on Zacks.com for Google. So they're a little different from Amazon in that Google actually cares about their EPS a little bit here. So as always, the black line represents the price for Google. The y-axis corresponds with that. Then we've got these multicolored lines. This represents the evolution of our Zacks consensus estimate over time. The different color lines correspond to different years, with the gold being 2017, the gray or the teal, whatever we were calling that, I forgot, 2016. Now, if you notice, the gaps between these lines do represent growth year over year, which is good to see. But if you notice for Google, estimates kind of start up high and then start to trickle off, start up high, start to trickle off. So that's something to note on the stock. And we kind of had, from 2014 all the way through the first half of 2015, stock kind of struggled, big pop, but now it almost seems like we're in this consolidation period, maybe even rolling over now over the course of the last year and a half. Now, these little arrows here, the reds and the greens, show times when Google missed or beat expectations and what happened to the stock. So Google doesn't exactly come out beating. I mean, here's one earlier in the year, but there's a miss. So that's 4, 8, 9. What? 9 out of the last 10 times they miss. So don't get too excited for Google here, but I think part of that reason is because they don't issue guidance, so the analysts are kind of guessing. But it is impressive that the analysts have been so close nonetheless. So overall, kind of my impression I get from this price consensus EPS surprise chart is still got some nice growth in Google. Things are starting to roll over a little bit. Perhaps that concerns me a little bit, but I do feel great about Facebook's mobile ad revenue that they were talking about. Just ad spend overall in the digital space has definitely come back. I've seen that from multiple earnings reports, and that should be a feather in Google's cap here in the or Alphabet's cap. I'm going to have to get used to saying Alphabet, just like I'm going to have to get used to saying www.zacks.com/live. Check it out, sign up, get some free awesome stock picks, because I'm not the only guru around here. I just might be the most handsome. Beard game strong. Anyway, so now let's go ahead and take a look at our detailed estimates page for Google. So this is going to give us a few things. First, it is a Zacks rank number 3 hold right now, but that's because you haven't seen too much in the way of analysts' estimates, right? We've got one analyst that came out and dropped their estimates for the current quarter over the last month. 2 have done so for the next quarter, 2 for the current year, 2 for next year, but we do have an analyst in the last week that upped their estimates for next year. Let's see the impact on that Zacks consensus. Not much of a drop. It's only dropped it from $6.49 to $6.47 for the current quarter. Next quarter's numbers have gone from $6.46 to $6.44. Current year number, 26.24 to 26.16, and next year's gone from 31.33 to 31.27. That's why you're not seeing a Zach's rank number 4 sell in this stock because the magnitude of the move of the Zach's consensus estimate has been so small. It's kind of insignificant, right? There haven't been huge moves in the earnings estimates coming from these analysts. So there's nothing huge, groundbreaking, earth-shaking, earth-shattering that's coming out of this. I think that's a theme that we're going to have to keep throughout this little talk that we've got going on here. So aside from the detailed estimates, now let's just go ahead and start digging into this options chain and see how it is that we're going to make a bullish move or a bearish move here on shares of the Googs. All right, so here I'm looking at I'm gonna look at the A-class shares, the GOOGL, right? And now we're looking, the stock's trading what, 760? So let's look at the 760 calls and where they're at. Kind of look and see, you know, as I do it always, I look through this chain and I'm just kind of checking out where's the volume been, what's the open interest, right? So here's a nice chunk at the money. 1,200 contracts of open interest, 479 traded today, 941 at the 770s, right? Here we got some nice moves here at 800. You got 1,800 contracts traded today at 1,800. That's 2,000. I mean, at 800, that's 2,087 contracts open interest. If you look at the 810s, 1,572 contracts. 2782 of open interest. And even if you go further out, look at the 830s. 2,850 contracts traded at 830 today. Wow. 1,343 contracts on the open interest. 2,800 contracts at 830 today. Wow. That's on the call side. Let's look at the put side real quick, kind of see what's jumping out at us. In the money is just sleepy time. Nobody's trading anything. If you look at the money, we got 903 at the 760s. Man, you got to go all the way down. I mean, look at this. 720's got 1,100 contracts today. Aside from that, 680 here at the 740s. So interesting. Not a lot of exposure on the put side. Now, let's go ahead and see what our sort of implied move from the options markets is here. So the way you do that, you go ahead and take a look at the at the money call and put. So Google's trading, I don't know, 763, 64-ish right here. So let's look at the 762.50. It's going to cost me 2080. And then let's look at the put side, 1998. All right, that's 40.78. Go ahead and divide that by that 762.50, and you get 5.3% implied move for shares of Google here. Now, again, this is the front week, so this is going to happen immediately, right? This is a quick move that's going to happen right away. I think that's the way that we're going to play these things because today I feel like living dangerously, right? So we're going to be looking at these that are expiring right away. Now, if you want to be a bull, this is going to be great because this is going to take me a little bit longer today to explain, but it's going to be fantastic. Trust me. If you want to be a bull, if I want to be a bull, this is what I'd be looking at. So I'd be at the money. I'd go ahead at this 762, right? The 762.50 is going to cost me 2080, right? So I'd be long that. Now, the top end of this implied range here is 800, okay? I've been very successful recently just trading half of that implied range if I'm going at the front week contract, okay? So the reason why I'm doing that is it happens a little bit quicker, A, and B, sometimes it takes a little bit for this sort of post-earnings drift to take place and the stock to kind of move. So I'd be comfortable doing the 762.5 and 800 call spread if I was going out to August and I was confident in the stock and I wanted to see some more post-earnings drift, right? But the more conservative call than that in some regards is the 762, 780 call spread. Let's just do 782.50 so that my math is easy. Nah, let's do the 780 so we do this proper, okay? So 780, subtract that 1309. So I'm going to sell that contract. So that's 771 is how much this is going to cost me. All right, now this is important. 771. So that call spread, the 762.50, 780 call spread is going to cost me $7.71. Okay. Now, the most money that I can make from this is the difference in the strike prices, right? So 780 minus the 762.50, that's 1750, okay? So if you take that 1750 and subtract the 771 that I'm paying for it, that's 979 in potential profit, okay? 979. Now divide the 979 by my original investment of 771. Boom. 127% potential gain on this one, okay? How do I lose money on this trade? I lose it all if Google ends up expiring, or if the contract ends up expiring with Google trading below 762.50, okay? So that's kind of my line in the sand if I'm bullish on this. I need it to be above 762.50. My break even is going to be 762.50, 762.50 plus that's 771, right? So as long as Google's above 770.21, I'll be break even, okay? And then I'll make every penny above that, I'll make $1 up until we get to 780. Anything above and beyond 780, I just cashed in pretty good. I made all that money. I made 127% of my money, right? But I got to put up $771 to do it. Again, Google, this is expensive stuff to mess with right here. But in the grand scheme of things, it's better than paying $76,000 to control 100 shares, right? Okay, now let's go ahead and look at the put side. I'm going to put together the same, same sort of thing, right? So I'm going to look at the 765 put that's going to cost me $21.70, right? And instead of going all the way down to the 720, I'm going to go to the 740. That's going to cost me $9.90, so subtract the $9.90. So this trade is going to cost me $11.80 to get into this put spread, okay? Now, the most money I can make here, the difference in the strike price from 765 to 740, that's $25 is the difference in the strike prices. Now, subtract 25, and you get $13.20 is what I could make on the upside of this trade. Divide that by the $11.80 investment that I'm going to make. Talking 111% potential gain, right? Now, what has to happen for me to make that 111%? Google has to close below 140 at expiration tomorrow. In order to break even, Google's going to have to be at 765 minus 1180, which is 753.20. So as long as Google closes below 753.20, I'm not going to lose money on this trade. I'm going to max out if Google closes below 740, and I'm going to lose everything. And I mean everything. If Google closes above 765 at expiration tomorrow. Now, that's the bull case and the bear case. Which one do I want to trade? Neither. I bet you didn't see that one coming. I've got a better trade for you guys here. This is what I'm talking about. Okay, so remember this $800 level we were talking about before to the upside, right? And then to the downside, we're talking about 720. So what I'm going to do is I'm going to go ahead and sell a call spread above 800, and I'm going to sell a put spread below 720, right? So this way, I want both of these bad boys to close worthless, okay? So I'm basically betting that Google's not going to make this big of a move that everybody is pricing in on this options chain, right? I think it's not going to be that drastic. If you see, Google's kind of been trending down, trickling. I mean, we already talked about that, but let's look at the actual trade here, okay? And we're going to look at the numbers. These numbers are going to be a little bit tougher, okay? So let's look at the 800. So I'm going to go ahead and I'm going to sell this 800 for 622. I'm going to sell the 800 and I'm going to buy the 810, okay? So I'm selling the 800 for 662, buying the 810 for 428, okay? So I'm taking in 194, okay? on this. And I'm going to have, if you look at the difference in the strike price of $10, take out that 194, that's 806 I'm going to have at risk on this leg, okay? 806 at risk on this leg. Now, on the put side, we're going to go all the way down to that 720, okay? So let's look at 720. And I'm going to sell that 720 put for $375, okay? And I'm going to buy the 710 for $230. Okay? So there I got $145 in my pocket with $855 at risk. Okay. Now, here's the tricky part, okay? How do I make money or lose money on this trade? If Google closes between 720 and 800, 720 and 800 tomorrow at expiration, with the stock at 760 and change right now. As long as Google stays between 720 and 800, I'm going to make 145 plus 194. I'm going to make $339. That's $339 that I'm going to make as long as Google does that. Okay? All right. Now, what happens if Google goes crazy and goes to the upside, right? And closes above 800. How far above 800 does Google have to close for me to lose money on this trade? Okay? It's going to have to trade at 800 plus this 339. Okay? So 800, 339. If it goes above that, I'll start to lose money. Or on the flip side, if you go to 816.61, I'll lose money to the downside if it's below that. Okay. Now here's the part that stinks. The most that I could lose is going to be 855. Okay. So I'm pretty much hoping to make 339, but putting 855 at risk. Now, how do I lose $855? If Google closes below 710, I'm going to lose $855. Okay. On the flip side, if Google closes above 810, I'm going to lose $806. Okay. Lose $806. But it's not the whole 806 and it's not the whole 855 because I've mitigated that with the other side of the trade. Okay. So you have to take that 855 and subtract now the 194 that you got on the call side. So really, that's only 661. That's 661 that's at risk, right? And then on the flip side, I've got that 806, and I subtract the 145 that I get from the other trade, because that's going to be in the green. So that's also 661. So there you go. So worst case scenario, I'm gonna end up losing $661. That sounds pretty good, given that I could potentially make $339, right? These are pretty good. Those are pretty good odds. I do like that. And if you think about it, 339 versus the 661, that's 50%, right? As long as this thing just kind of stays in the middle, right? So that's good. So this could potentially be real good. I'm going to strangle this bad boy. So the Bulls, sorry, you're not winning. Bears, sorry, you're not winning. I want it to be slow and steady, right in between. Let me pocket that premium. Got a few bucks at risk, but hey, that's the name of the business. So thank you so much for coming, hanging out with me today. I think that strangle is going to be the way to play this bad boy with Google. Again, after the close, we're going to find out. Be sure to chime in below. Tell me what trade you went ahead and put in, if you put in any at all, and what sort of strategies it is that you guys are looking for me to talk about, because maybe we can start to get a little bit more advanced with this thing. You never know. So next week, we're going to let you guys know what the new earnings report is going to be that we're going to be trading. So we'll let you know that as soon as we get our minds around it, figure out what what we want to do. And again, I need your suggestions because I like to do what the people want me to do. So go ahead and chime in below. Everybody have a fantastic weekend. I will be here tomorrow, but we're not doing one of these. So thank you so much again for joining me, and we'll see you again next time.